Being recorded. There you go. So as I go through this, like there'll be, depending on where you are in your trading journey, what I'm about to go through may very well be just too simplistic to be of any real use to you. But I want to start right at sort of what I consider the beginning, the basics, and go through it from there. So if you're brand new to trading, or even if you're watching the recording, you can just ask me anyway. But anything that I'm not sort of explaining fully, because I want it to be understandable. So for the very brand new person, there may be things that I just take completely for granted and don't think to explain fully. So if that's happening, speak up. Likewise, if you're an experienced trader or got some experience, feel free to chip in your 2 cents worth, because you know there's not just one right way of trading. Lots of people have different ideas. Plus, if we get a bit of that to and fro going on, we'll probably get a lot more information and value kicking on here. But probably what I'm mostly going to go through tonight is support and resistance. Now, I'd done a bit of trading before I'd even heard of the support and resistance. And so to me now, I don't know how you could possibly expect to trade if you didn't know what that meant. But when I did hear about it, and it wasn't until I did an actual course on trading that I realised, I mean, I'd heard of support and resistance, but I didn't really understand what it meant or anything like that. So when I did a course and it got explained to me exactly what it is and more importantly why it was a real, blow your mind sort of point that I learned. So to try and bring that across in my own explanation, first of all, I want to go through why the market, as we can see, we've got a chart here. We've got the Ethereum US dollar chart going on here. And so I want to explain, first of all, like why the market goes down, why the market goes up and down and up and down. So if it's going up, what's causing that to happen? And it's nothing technical at all. It's exactly as simple as this is going to sound. It's supply and demand. It's exactly the same as if you're, I don't know, if you're trying to sell your house and there's another 10 houses for sale in the same street, you're going to be really lucky to sell it, let alone get a really high value for it, because there are a lot more sellers than there are buyers. And likewise, if you want to go and buy a house and you know you want to buy one in this street, in that suburb, but there's only one house for sale, and that guy probably knows it, you're going to have to pay a premium price, because there may be other people wanting to buy it as well. So there's going to be more buyers than sellers. So that will push the price up. So exactly the same here with trading. We're talking about Ethereum, and everything that I'm going to cover in probably the quite a fair few of the first videos we go into, it won't really matter what you're trading. It could be crypto, oil, forex, other indices. The same concept in these videos are going to be usable no matter what you're trading. There are some more technical trading strategies and indicators that we may or may not get into at some stage, which are more specific to crypto than most other things. But for the moment, it doesn't really matter what it is we're talking about. We can sort of use the same technical analysis, the same strategy. So, like here, we've got the price going up pretty quick. And that's simply because there are a lot of people wanting to buy Ethereum. More people wanting to buy it than are wanting to sell it, which means the price has to go up. Same as your house. And then the same when the price is going down, it simply means that there's more people wanting to sell Ethereum than want to buy it. So the price, like at this level, we're talking about the price going down here. At this level, there might have only been, there might be, let's say there's 100 people want to buy Ethereum, or want to sell Ethereum, but there might only be 2 or 3 that want to buy Ethereum at this price. So for the other, the rest of the people that want to sell Ethereum, they're going to have to take a lower price down to where these people are willing to buy some. So, another dozen might want to buy at this price. but we've still got 70 people that want to sell Ethereum, but there's nobody wants to buy it here. So they have to accept a lower price for someone to buy it, and so on and so forth, until all the people selling have managed to sell, or until it gets down to a price that they're not willing to sell for. Does that make sense, guys?
Yep.
And maybe I was just a bit more naive when it comes to trading than you guys, but when I learned that, I thought, wow, that's just such common sense. How come I didn't know that beforehand? So it's not, I mean, there are other factors that make people want to either buy or sell. You know, there could be news events in the world, people like Elon Musk, you know, and the reason those big whales can actually manipulate is the same thing. If they go and sell a whole heap, that can drop the price. Or if they go and buy some, everybody else wants to buy some and copy them. So there's more people buying, and that pushes the price up. So, you know, for me, the fact that this crazy, confusing chart that goes up and down and zigzags, and that's all I knew about trading when I first started, the fact that that is just something extremely simple, like people wanting to buy and sell, you know, to me meant, hell, that's not as technical as I thought it was going to be. So that was very sort of reassuring for me that, you know, even though it looked technical when I first looked at it, it's only portraying something that's very, very simple. All right, so that's why the price goes up and why the price goes down. Now, one more point, which a lot of people, and I mean a lot of people, don't understand. I mean, once they start trading, they do, but you'll find there's a lot of people, like when the crypto market just tumbles down, you know, that I'll get people going, oh, you must be bloody, you know, you must be hating what's going on here. The price falling out of the market. And as a trader, it doesn't really matter one way or the other, because we can do sell orders or shorts and make just as much money as the market goes down. But the general assumption from non-trading people is that the market needs to be going up for you to make profit. I know all you guys no doubt understand the difference there, but there'll probably be people watching this video that, you know, that might be something that they've never thought of before. You've just got to know, you've just got to be able to work out which way it's going to go. And it doesn't really matter which way. If you can work it out, you can make money off it. So what we're looking at on the screen now, this chart for Ethereum US dollars is on the 1 hour time frame. And what that means is that each one of these lines, so we've got a green line, a red line, green, red, each one of these lines, which is what we call candles, each one of these candles is the price movement over a 1 hour period. So like this big long green one here, at the start of the hour, the market was here, and the market may have gone up and down a dozen times, who knows? But when that hour finished, the market was right up here. So that's what the 1 hour time frame means. And I'm just going to jump up to the 4 hour time frame now. So each one of these lines is now 4 hours. So we're really looking at from here to here is now 4 times as much time as it was on the 1 hour time frame. But I just wanted to come down here. And now we get on to support and resistance. If we have a look, I mean, obviously the market's gone up and down. It constantly does. It never just goes straight. But the market came up here, and for some reason, the market started coming down again. It went down a fair way. And when it got up to here, it turned around again. Now, wherever the market turns around, if you look to the left, most of the time, 90% of the time, you'll find that the market has changed direction at pretty much exactly the same position over and over again. So here it's turned around here, it's turned around here, same thing here, turned around here, and then it started to go down, not quite the same place here. But the reason why that happens probably doesn't matter too much, but the reason's just simply like what we were talking about before. When the price got this high, this is the price that people wanted to sell their Ethereum at. You know, they might have bought it way down here and they've said, okay, if the market gets up to, you know, $2,900, I'm going to sell my Ethereum and take that nice profit I've made. And so that's all that's happening here. When it reached 2,900, there was a lot of people were willing to sell there. And they say they sold some there, but that pushed the price down. So there may still be a lot of people that want to sell at 2,900 but didn't get a chance to here. So the price goes down and eventually it comes back up to 2,900 again. And those people that wanted to sell at 2,900 but didn't get a chance to here, they'll pounce on that and they'll, you know, they'll sell their Ethereum for 2,900. And, you know, obviously the market, that's pushed the market down because people are starting to sell. And they come back up here and the market sort of just touched 2,900 this time. So probably in this case, the last few people that wanted to sell at 2,900 did so. And then the markets, you know, didn't quite make 2,900. And then the next time, you know, it's on 26 and 26. So if we draw a line roughly about there, that's where the market touched. So roughly at about 2,900, that becomes what's called a resistance line. Because it's resistant, it's resisting the price going any higher than that. And simply because at that price, people are wanting to sell their Ethereum. One quick point I'll make is that while most people do tend to just draw a line and call it a resistance line, the line is never a finite line. What we usually try to do is draw a resistance zone. So the market reached that resistance line, but then we can see this, the wick, which is a skinny part of the candle, it did go right up to here before the market turned. And here it went past the resistance line into the zone. Here it went into the zone. And here this time it only just made it to the line. So my point is everybody's not selling at exactly 29. Well, not everybody's selling at exactly $2,896.55. They're selling between there and up here, which is, you know, nearly $3,000. So support or resistance, there is always a zone. So you just got to remember that. So if the market does go past it a little bit, it doesn't necessarily mean it's broken through the resistance line. It's just gone into the zone and then eventually it turns around. So is there any questions on why I've drawn that resistance line right there? No. Awesome. Makes me sound like I'm such a good teacher. Nothing like talking about something basic to get it right. Okay, so that's resistance, and support is exactly the same thing, but on the bottom. So resistance is, so this right here, this last candle, that is where the current market value of Ethereum is at $22,512 US. So resistance is always above the market value and support is always below the market value. So you can zoom out further and look back further and try and work out where the market, where the support and resistance zones are the strongest. And you can, to decide where they are the strongest is simply where they've bounced off that line or zone the most times. So if it bounces once, well, there is resistance there, but it might not really be, you know, it might never bounce there again. If it bounces a second time, that's when I would really call it a resistance line or zone, because the market's turned around at exactly the same place twice. So, you know, then the third time it's bounced again. It could bounce any number of times. In this instance, though, it started to move down a bit. It could well come back up here, hit the zone, and turn around again. So that'll be a fourth time it's bounced off it. But say If it's just turned around there once, it's barely resistance, extremely weak resistance. Twice, you know, it's been good resistance. 3 times would mean that it's quite strong resistance. Although quite often, you know, after it's bounced off it 3 times, the next time, like in this case, it went right through, nearly through the whole zone. This time, it only just went into the zone, but it stayed there for a while. And then the 3rd time, it just barely touched it. And since then, it hasn't gone up there again. So the resistance will get weaker. Most of the time, the resistance will get weaker the more times it's tested. And that's because people that want to sell at this price start to run out. So if we come down the bottom, I was just trying to find where the markets bounce the most. And like here, this one's come down. We've just got 1 wick, but it's come right down to there. So it's bounced there. It's broken through support there, but then when it came back there again, it bounced there and it's bounced there again. So it's bounced 1, 2, 3 or 4 times on there. So I would call that decent, you know, pretty good support, sorry. Support's underneath. And when you go to draw in the actual support zone, what I want to do is sort of try and cover, like I wouldn't try and cover this big bit of market structure here, and I probably wouldn't even cover all of these big long wicks, but I want to cover these wicks here, maybe go a little bit higher to cover to get these wicks into it a bit more. You're just trying to cover more of the area where the market's actually reached before it's turned around. So, as I said, I'd probably go from just above it a bit this time and try and cover all of these wicks. You know, maybe about there. You don't want to make them too thick, otherwise you know, in a little minute, I'll go through exactly how we use these zones in order to place trades and make profit. But if they're too thick, it's not quite as certain. You can't make as accurate a decision. So that's support and resistance and this relevant zone. So that's all makes sense so far. Support should if resistance did. Yep. Good. I'm not going to get into this tonight because I said I wanted to keep them short, and it's not actually displayed on the screen this time. But sometimes, some people try and tell you all the time, but that's not true in my opinion. But sometimes when the market breaks through support or resistance, and then it'll come back up, sometimes it'll bounce off there and come down again. So this used to be support, but then if it starts bouncing off the bottom side of it, it's actually becoming resistance. And that's sometimes referred to as an equilibrium zone, simply meaning that it's both support and resistance. But in this case, we don't have that. We've just got straight support and straight resistance. So depending on how much distance there is between resistance and support, we can possibly place some trades and make profit there. If they're too close together, then it wouldn't be a good trading opportunity. But if there is a good distance between them, then it'd be worthwhile. So we can use our little little measuring tool here and measure between support and resistance. And in this particular case, there is a 26% difference in the value of Ethereum between the support level and the resistance level. Now, if you were trading like on leverage of 10 times leverage, and you placed one down the bottom here and you took profit right up the top, 26% away, that would mean 26 times 10. That would mean you'd make 260% profit on that trade, which is obviously quite good. Very good, in fact. So in this case, we could definitely, you know, trade between support and resistance. Without knowing anything else, we could make good profit trading support and resistance. So for example, if when the market bounced off here, if we'd have placed a trade, let me just draw a line. If, you know, as the market bounced and started to come down, if we'd placed a trade there, we'd probably never place one right up here because we wouldn't know that the market's turned around yet. So we'd sort of have to wait, and next Wednesday we'll go through a little bit more on the candles and the story that they tell. But just for now, when the market just shot straight up to here, we had no idea the market was going to turn around and go back down. So we wouldn't have placed a sell order there because we wouldn't have known it was going to turn around. But when it did turn around and start coming down, we could very well have placed a trade about where this yellow line is. I don't know why that box keeps coming up. So we could have placed a short order here. Short meaning we want the market to go down to make profit. And if we knew that this is where the support zone was, we could place, you know, a take profit order, and I would place it probably somewhere about here. Somewhere about there. And let me make it a pretty colour. Green will do. And the reason I would place it there is because I know this is where the support zone is, where the market is most likely going to turn around. And I'm going to put it a bit above that just to make sure that the market does hit it and I do take profit, because there'd be nothing worse than me putting the take profit down here and the market only reaching here and I just miss out altogether. So now let's see how much profit we would have made. So we just need to measure between the yellow line and the green line, and it would have been 15, nearly 16%. So on a 10 times leverage trade, 150% profit. So if we were to put $100 into this trade, we now have $250. So that would be awesome. But when the market is ranging like this, ranging simply means it's going sideways but bouncing between support and resistance, as opposed to sort of trending upwards or trending downwards for an extended period of time. So that's trending. This is ranging. So if we'd have placed a trade here, we would have made 150% profit. In this instance, you know, we saw the market went straight through support, but then started bouncing back really quickly. So we could have very well placed a trade here and looked to take profit up here just before the resistance line. And that one's a bit longer, you know, it could have been 200% profit. And then when it bounced off there, you know, we could have taken 150% profit here again. Placed a trade here, took 150% profit to there again, and placed a short order. And it took a bit longer this time because it stayed up higher, but eventually it came right down again. And that would have been another 150% profit. So just in this little section here, and that's sort of from there to there is 20 days. We could have taken 150, 200, so 350, 500, 650, 800% profit we could have just made as the market did that. And I know this is all in hindsight, so it's very easy to trade in hindsight. But if you had stuck to those rules and just traded every time it got to resistance and then traded the other way when it hit support, that's what you would have made. As simple as that. We'll get into why, I mean, and that's as simple as trading is. And most of the different ways that I trade are as simple as that. We'll go into why it's actually not that simple when you actually try to do it yourself, but it is that simple. It's all up here that makes it not so simple. But that's simply how you trade using resistance and support. Yeah, you know, maybe like in actual fact, you know, I may not have traded this one because the market hadn't bounced yet. So I might have waited for it to bounce. When it bounced there the second time, I would have said, okay, we've got good support. So now I'll trade. And I definitely, when it bounced off support, I would have definitely traded again because I knew that the market was very likely to go right up to here again. So, you know, in hindsight, I could have made 800%. In actual fact, if I was trading it, it might have been 300 or 400%. But either way, it's still extremely excellent. So that's probably support and resistance I get, guys. Any questions on that? I'm sure I've done my 15 minutes already.
Oh, good.
Anyone got some 2 cents worth to chip in about support and resistance? No? Awesome. All right, well, I'm going to stop recording and then we can chat about whatever else we like, guys.